So good morning, active traders, and welcome to our Trading Week Ahead broadcast. I'm coming at you live here from Colorado on Saturday, July the 30th, 2022. What about that market rally, right? Now, to listen to the talking heads, you'd think everything's all rosy and the market's finally reached a bottom for the year and it's about to go up for the rest of the year. It's still a bear market rally. My number one tip for you guys today is to pay close attention to the market at its key resistance area, which we have not yet broken over. Right there under the 4,200. Notice, please, we're right up under resistance. So what I'm looking for, I will be, how to say, I'm both long and short the market. I'm in my inverses like UVXY. I bought quite a bit yesterday. I think I'm 500 shares deep. It's a really good price at a 52-week low. VIX is down near 20, and it may well recover. So my number one point is to start swing trading this market. And now it's fine. We may, if you're like me, we may all have small swing trading positions on right now, long side bias and things like some of the Bitcoin related stocks like Marathon. Ford Motor Company is one of my favorite. I like Ford, Disney, and many others that are doing well. The number one tip is we don't want to start swing trading aggressively until the market stays above 4,200 for at least 3 days. So I want 4,200 breakout for 3 days or more. And if that holds, then that's a very valuable tip, by the way. I should charge for that tip alone. You want 3 days over 4,200 in the S&P on an up note. If you don't have that, we're at a resistance area that we may well turn back down from. The market may all of a sudden catch everyone by surprise, except for the smart people who we expected. But we may well see a reversal to the downside next week at some point if we don't break and hold over this resistance. So that's a number one. Let me get this chair up closer. That's another one. Number one important tip is we're at resistance. So remember, you don't buy stocks at resistance, and we don't want to go long at resistance here. This is a good place to sell into. And I'd mentioned for my live room members yesterday, we should mostly go cash into this weekend. Okay, book profits on open swing trades because we're at resistance and it may well drop. Notice, please, no talking head on television is smart enough to tell you guys this. They're not talking about resistance or danger. They're all saying, well, it looks like the market's finally going up, so let's all pile into it and see what's our quality, value, or growth stocks of interest. It's good to do that research, but the point is we're at resistance, so be cautious here. This is a place not to go long. This is a place to have sold like I did. I made money trading Ford. I told you guys last week, the last couple of weeks, Ford Motor Company would be a good play, and it was. But I sold my Ford into resistance here under the 15. I think it sold 14.20, something like that. I'm trying to remember. Somewhere up in there. Anyway, Ford's been a good runner. I've been calling along since 12. Buying the 12, selling the 15 is good. Now, we can always get back in if it resumes its uptrend, okay? But in this market, you want to either buy low, sell high, or buy high, sell higher, but sell into resistance because we're still in a bear market. Don't forget that. We're still at 40-year high inflation. We still have all kinds of problems out there. So record high gas prices are still there, right? So just because we've had a recent exuberant lift does not in any way, shape, or form convey permission to aggressively go along the stock market. In fact, I started to fade it as well, going along in some of the inverses. The other thing I want you to pay attention, so that's tip number one, is if you get nothing else out of today's session, remember this. You want 3 green days over the 4,200 in the S&P before going long the market. Remember I said that when it's back down at 38.50, you guys, oh yeah, he was right. Remember this. Always anticipate. You have to be an anticipatory trader, not a reactive trader. The other thing we want to look at is our VIX. 20-ish is support, and you can see we're right under it. Now, at the volatility index, you can see let me explain it to you. We're pattern-based traders. What's the pattern that the VIX shows? Do your homework. Look at the pattern. Just visually try and make sense of this up and down chop. It's kind of a hint there. What happens to the VIX? When the VIX goes up sharply, what does it then do? When the VIX sells down, what does it then do? We're currently at VIX support. Yeah, reverses. Oh, yeah, right. Reverses. Right. Thanks again. Thanks, Heidi. Right. So we're at support. Now, is anybody paying attention to that? No, they're just looking at the main direction. It's very difficult to wrap your head around reversals as an active trader. And it took me many years myself. So probably 8 to 10 years to realize the power of reversals and recognizing when no one else is talking about reversals, recognize that we're at a reversal point in the VIX, right? Look at the line, connect the dots. It's telling you loud and clear the market, the VIX is at a support level. You just connect the dots. Now, is that going to keep it from going down to 18 or 14? No. Lines on charts don't stop things in their tracks, but from a pattern, from a price elasticity, or in this case, a volatility elasticity, that's a good phrase. I should write that down. Volatility elasticity. It's like a rubber band. It pulls and then it snaps. Rubber bands, price elasticity. An old Wall Street guy, he was a market maker back in the old days, back in the 70s. He came to he saw me, he looked me up in New York when I was speaking for Money Show there at the Marriott for one of the Money Show events. And he's a crusty old guy, and he was giving me all kinds of great tips. And this is over a decade ago. Anyway, the point is we're at a support level in the VIX based on the trend line here. So that's a VIX support level. Nobody else in the trading industry that I know of, at least, is telling traders this. It's a very valuable, useful tip. The VIX is at a technical support level when you connect the dots for where it's pivoted. Now, if we use a horizontal support, that would be down to 18 or 20 or so. So the 18 to 20 is the drop dead support level. Now, we will say that we will have a bullish market if we stay. For me, I want to see the VIX stay under 20 for 3 days. So that's the flip side of the S&P analysis is the VIX analysis. And it's another rider downer. To quote colleague Dan, you want to see the VIX under 20. The VIX under 20 for 3 or more days signifies a return to a more bullish market, okay? So we want to see the VIX under 20 for 3 days. That will signify a probably return to some buying that may last for at least a few more weeks. So we want to see those two signals. The VIX under 20 and the S&P up over the 4,200 there. All right, let's take a look at a few charts. Recently, we looked at Ford. Other charts on the mend here. I was trading Disney last week. If you remember, I called Disney long over 102 was my long call for you guys a few weeks ago. So if Disney continues on up, it breaks the 110, that'd be the next long trigger in Disney. Anyway, Disney looks good. Netflix is on the mend finally. It's making a bullish cup. So these are all things that I'm looking at. Either I'm in or I'm looking at trading if they continue on up. PayPal's up. The Ford Motor's coming down. I sold most of my Ford because it was a nice, big, healthy 3-day run in Ford, right? It ran from like 1280 to almost 15. So I sold right under 15 yesterday. So that was a good exit for me in Ford. I'll rebuy over 15. Our Bitcoin stocks like Marathon and others are good. This is one of my top picks. I called it for you guys 3 weeks ago. Remember, I said MARA for a long over the $7. I think it was $7 a share was my long call for you guys. Now, my live room members, we cover this one pretty much every day. Marathon's a really good chart for both day and swing trading. But this is a really good pick over 15 for a swing. Write that down. Put that in your pipe and smoke it. Mara over 15 with no more than a $2 trailing or hard stop. We saw recent volatility in run. Probably as good a time as any to switch to the intraday chart here. We called run for our live members, and you can see it ran. Now here's a good example. Do you see this 31.3 up here? That's where I called it long for my members yesterday. Live room members were given that alert before the opening bell. I post these alerts in the table for people, and I said, go long for a day trade or a swing trade over 31.3 and run. Now, Solar Run is a solar sector stock, and the solar sector went up sharply starting Thursday on news of U.S. government infrastructure spending on green energy initiatives, including solar. And so the whole entire solar sector lifted up sharply. And thanks to a couple of my traders had mentioned that for me on Thursday, and we did a really good job for our members with this. You can see ran, it was 26, now it's 33. There may be more room left to run in run. So that was a good chart. And just a quick tip before we look at some additional charts. I do have the Summer Success sale available now, and it's a really good opportunity to become a member and join my live room. And we meet with the same Zoom platform both morning and afternoon, 5 days a week. I'm there starting at 8:30, really early in the morning for you guys, 8:30 daily. And I've got a 6-month special going through tomorrow, midnight Eastern. And you'll see the links to order will be taken down tomorrow night at midnight. But I do have the special. It's at trademastery.com/summer success. And you can see that up there. And you get 6 months for just $6.95. I'm raising the room rates up significantly this upcoming week in August, well, the early August. So this is a really good chance to get last chance for a great price to learn with me. That brings it to just over $100 a month, which is a really good deal. You get 6 months with me for $6.95, and you get live alerts. We do Q&A. We get alerts from our members, and we post those for you guys, as well as specific training and entries from me as well. So something to think about. I've been running the room now for 21 years, so I've been at it for a while. Tens of thousands of traders have worked with me, and it's great to see so many of you here today too. Big turnout in the Zoom room. Anyway, how to trade the strongest daily gaps and breakouts. Bookmark that page, trademastery.com/success. And what are some other good charts? We also cover, unlike a lot of other places, we also cover our long bias ETFs and inverse ETFs as well. Things like TQQQ is good for us, right? And SOXL and others. If you take a look at some of these charts, it's one of the tricks to day trading correctly is using what I call whole number breakouts and exiting near whole number highs. So this is a really good example. I published an article in Stocks and Commodities magazine years ago on this, using Twitter as an example. Back when Twitter, I think, was like 13 or something. So it's been a while. But we trade within whole numbers. And one of the big benefits to my live room is I tell traders when to sell. And again, for paper trading, demo account use only, blah, blah, blah. But I tell people when to sell. And for example, here, I called the exit, our entry on this one, I think was like 1320, and the exit was 1390. So this is a really good example of my whole number strategy. And that's basically where you're looking to buy above one whole number and then sell into the nearest one. Hey, Johan, if you have a question, please put it in the chat box. Like an answer key, you can see the lines that I drew there were at 13 whole number and 14. So I called it long right above 13, and I said to sell right under the 14. This is what I call my whole number breakout strategy. I always like to have us go long, we don't ever buy a 0.9. We wait until something breaks above a whole number, in this case over 13. Say at 1310 or 1320 was an entry. And then in live, I said, we get out here near the 14 at 1390 or so. Now, sometimes they'll continue on up over the whole number a bit, but usually that's a false breakout if it's a move that's already occurred. So we correctly called it for our members to trade that first breakout within a whole number. That's a very good strategy I urge you to consider adopting, or at least testing in your own trades, is look for breakouts right above a whole number and then sell, or at least tighten up a trailing stop right under the next whole number up. So in this case, the life cycle of the trade was between 13 and 14. And that was the biggest move of the day, by the way. So that's a good point. Hey, Chris, let's see. Likewise, at what levels of VIX is the market begin to be bearish? Back over the 22 to 24 in the VIX is a bearish, and the 18 to 20 is bullish. Now, Ford Motor Company did good. Now, I called it live. I was trading it, and I sold this right near the exact top. I think it was like 78 to the penny. That's where I said would be a good place to sell it when it was still green going up. And again, the reason is it was getting close to the upper end of the 14 range, up near 15. So when you're in a nice, successful trade, it's another quick tip. When you're in a good, successful trade and it's gone up to just near the 80-cent mark, the 90-cent mark, right under the whole number. In this case, it was right near the 15. I said we sell here at the 77, 78, something like that. And that's where I sold my shares, which turned out to be the high of day. And the reason is, again, this is for a swing trade that I'd been in. And I also day traded this, but it may well gap back down to 14 or 14.30. So, of course, it could gap up over 15, but I'm a big fan of take the money and run. When you're in the money in a trade, it's a good idea to take profit. So that's where we trade this. Okay, this is another good example of the whole number breakout strategy. This thing, notice please, 14 was the whole number resistance on Thursday. So the whole number 14 was resistance on Thursday. So yesterday I said we go long. I forgot the exact trigger I used. I think it was like 14.2 or so, 14.22 or 14.15, something like that. Anyway, it broke out over the 14 or continued up over 14, and then I said to sell up near the 14.77, near what ended up being near the high of day. And again, this is again using that whole number strategy, looking for breakouts just within the first 20 cents or so above a whole number, and then selling within the 20 cents beneath the nearest whole number up. So buy 14.20, sell 14.70, 14.80. It's a good trade. U.S. Steel was also a good runner, and I called it long. I think it was, no, it was 22.6. That's where I'd called it for my members right there. And that was the start of a bullish cup. And this one ran all the way up to 23.6. So that was another good, at least 1 point runner. As a day trader, one thing you want to make sure is that you trade charts with big ranges, multi-point ranges if possible. Still, most of what I cover, like you can see, is under $30, $40 a share. So we like to keep things relatively inexpensive. I don't cover usually things like, Apple or Amazon or expensive over $100 things. I cover stuff that's usually 20 to 30, well, $15 to $30 is my sweet spot for what I like to cover in the room, because I want charts that have a good 68, 80 cent minimum potential that have at least a couple of dollars of range. So really good charts to work with. Looks like NEO ran. The pot stocks ran a little bit too. That would be kind of challenging to trade, but it was a pretty good runner nonetheless. But I like charts like that are 45-degree angles that run up. And one thing too, just in case you're wondering how to follow along with the workstation, I did put together a pretty good, like a 4.5-minute video on my YouTube channel I just produced yesterday on how the setup works, the types of what I've got on the elements of this workstation and how to use them. I made a quick start guide, a video instructional video for that. And it's on my YouTube channel. So let's see what else. I think that's about it for now. So let's see. Hey, Fred, if you guys have any questions, let me know. I'm going to wrap up sooner rather than later. If we take a look at our swing trading chart, the daily, let us zoom in here just a bit. That's 1 year. Let's zoom into our 90-day. The 3-month. Now I sold my Ford stock yesterday near 14.7. And again, that's because we're at a bullish cup resistance, right? It's another quick tip, and which was also near a whole number, near 15 to boot. So often on a swing trading chart, it's good to use a 90-day candlestick chart, which this one is. Who can tell me what that pattern is? And I learned this from my longtime colleague Steve Nissen at candlecharts.com. But what's that pattern? What's that called? That's a hammer, right? So it tells you to go long above the hammer. Perfect playing forward, right? Perfect, beautiful. And I'm profoundly grateful to Steve Nissen because what he teaches has really helped me become a better trader, genuinely, authentically, over the last 20 years I've worked with the guy. His patterns, he's the number one expert in candlesticks, and don't waste your time with anyone except Steve Nissen at candlecharts.com when it comes to candles, because he knows his stuff. And I've learned to recognize not only the simple patterns are a piece of the action, but the more important thing I've learned from Steve is how to make that as part of a systematic approach to trading. We're using the Eastern candles, the Western technicals, and trade management to evaluate risk reward potential. That's the main thing, is risk reward with candlesticks that I learned from Nissen. It's very valuable. It's extremely useful. You have my word on it. So make sure you learn from Steve at candlecharts.com. Anyway, point is, it's hammer time. Ba, 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 da, ba, da, ba, da, boom. But I sold up here, even though this is a very bullish screen, because I wanted to sell into resistance. I can always get back in, right? I never have FOMO, or, well, seldom. I have fear of missing out much less often nowadays than I used to, because I know how to professionally exit things on time. When it looks rosy and great, when it looks all green, that's a good time to sell. Not, well, we should just load the boat because it's going up. And the next thing you know, it's back down to 13 and people are scratching their head saying, oh, what happened? Well, I like to take profit when it's there. And I teach traders how to do that in the live room. All right. So that's forward. I like Marathon too on its pivot, les pivot in Marathon, and the other Bitcoin stocks that I trade are mostly Riot, RIOT, and Coinbase, COIN. COIN. Now this one has a big range, so I trade lighter share size in it. And this one's not nearly as good as Marathon, so that's why I trade Marathon. But Coinbase is another Bitcoin play. This one has better relative strength. When you're looking at evaluating charts within a given sector, always give preference to one that's going up more than the others, the one that has better relative strength. All right, so that's a good play. And our solar stock run, you can see it ran up here, it gapped up yesterday, or day before yesterday on Thursday. We had really good alerts for our live room members on both Thursday and Friday, yesterday and Thursday on this, especially Thursday as well as yesterday. And now it's looking really good. So I'm going to get back in this if it breaks over 34 later. But I think now's a good time to be cash. So friends, as you're looking for trade setups, I want you to start evaluating the difference between the more successful setups and exit strategies. That's one thing that I really like to help teach traders is when to exit, both swing and day trades, or how to trail a stop. And I do live trades daily in front of traders, and I show them and I tell them exactly where I'm entering and exiting, and I give them step-by-step walkthrough on exactly how to enter, how to exit, how to qualify a chart for consideration in the first place, and everything else you need as a professional trader. So that's why I like to work with everyone. Let's see a question from Ashton about let's see, if UVXY is a 52-week low, how low can it go? Well, everything can go to zero. So there's technical support at zero. Things can go low. Historically, buying VIX ETNs at 52-week lows is always a smart idea. Every single time within 2 or 3 days of reaching a 52-week low, and you may do a back test on this. I'm fond of UVXY. I bought, I think it was 400 shares yesterday for an overnight hold. So it's kind of catch a falling knife now, but it looks perfectly terrible. But the height of the candle is small. It held its own yesterday. At least it went sideways, right? Which, while not an uptrend, at least is a slowdown of the selling. It's another quick pattern to remember. When you're bottom fishing, usually don't is the right answer, but when you're bottom fishing, the first sign of a slowdown in the selling is a horizontal support after a sell-off. So this thing sold down and it went sideways. It didn't keep selling down. People weren't willing to sell this down under the 1020 or so. So I bought quite a few shares yesterday into the close, like 400. I think I'm somewhere between 500 and 700 shares deep in this thing, and I fully expect it to recover and bounce at some point in the near future. And the reason is every single time it's taken out a 52-week low, it always recovers within 2 or 3 days. So it looks really terrible here. Catch a falling knife, but if it does recover, it's got lots of upside. Now, if we look at some of the other sector instruments, like SOXs and SQs, we kind of zoom in on these. The SQs, again, SQs are attractive to me here because they've been going up, right? The NASDAQ short ETF had been in an uptrend all the way since the start of the year, from January all the way up until a few weeks ago, at which point it started to roll over and it's starting to head back down. Now, I fully expect it not to keep going down here or something. We fully expect it will find support off this base, right? Connect the dots, we're at support. We're getting close to it, so. You know, I don't know about you, but kind of mentally or psychologically, the biggest challenge I have about the whole buy low, sell high is you look like you are fighting the trend when you're buying low. And so usually it's a smart idea to only do that very carefully with very small share size, being a speculative play. But oftentimes the kind of the biggest payoff, I've made the most money trading reversals. What's like last time I called UVXY long at 11.6 and then it ran to 17 for my members, right? And this time I'm calling it long here now at the 52-week low under the 11 because I fully expect it to get back to 15 or so with no longer than maybe 3 to 5 weeks. So the big challenge, it's kind of like one talking head said, you got to hold your nose because it smells, it looks terrible, but that's often the best buying opportunity before a big pivot. Now the big, how to say, the big qualifier on bottom fishing is the following. It can't have just been selling off continuously. It needs to have had some recent strength, meaning some people were interested in owning shares of that, and then it sold off. So if there's recent strength, and then it sold off sharply, that's good for buy. You don't want something that's been just plowing down forever and bottom fish. Don't do that. But if it had some recent strength and then sold down, the ups and downs are something you want to navigate, right? Just like with our VIX. See, that looks like we take a look at the VIX here. Look at the VIX on the 1 year. You say if you draw the horizontal line here, the volatility index usually pivots almost always, well, 100% of the time. Not even usually or sometimes, but 100%. 100% of the time when the VIX drops, it pivots back up at some point, right? I won't say it's guaranteed to, but it's as close of a thing to a guarantee as I've seen in Wall Street, is the volatility index always goes up and down. The challenge is how to profit from that. And what I like to do is I like to buy the VIX ETNs when they're really cheap and then sell into strength. So I'm not going to be buying, for example, I'm not going to be buying UVXY when the VIX is back up at 32 or something, because that's near resistance, 32, 35 up in there. But I am buying shares down here because I anticipate within the next week or two, it will spike back up to the 27, 28. Remember I said that too. Write that down. Remember Calhoun said the VIX will be back over 30 within 2 weeks or so. I fully expect that. Nobody on the talking head television, you've seen my hit rate, my win rate, my accuracy of my calls. I won't say it's legendary, but it's very popular for good reason. You have to be intelligent though and think ahead of the game, right? This looks terrible. And every time before it would have been a great buy and looked terrible, right? That's really important. It looked terrible down here, would have been a great buy. Looked terrible down here, would have been a great buy. Looked horrible down here, would have been a great buy. Looked really awful down here, one of the best trades of the year. I made at least. Looks terrible here, would have been a great buy. Looks terrible now, it's a great buy. Remember I said that. All right, well, anyway, so that's and I trade UVXY to capitalize on that. Anyway, thanks so much for being here. I'm going to wrap up. We're out of time. Do be sure to give some careful thought to this. It's less than a fraction of the price of my old, like a 3-day seminar or 2-day seminar in Vegas was $1,500 or $1,495 back in the day. For here, you can get 6 months online with me for just $695. So it's just about $100 a month, or a little over $100 a month. So it's a really good deal. My best price of the year, I will be raising rates back up to where they used to. I used to charge $495 a month for the room for years. I think I'll just bring it back up to $197. But anyway, you can get 6 months for just $695 right now. So I hope that I have earned your trust and that the strategies give you some useful tips and ideas and things to consider when you're looking at developing a personal trading plan for you that makes sense. So trademastery.com/summer success. That's the link. It's good through tomorrow. So do be sure to at least bookmark it and give it some thought. You have my word. I'd like very much to help as many of you as I could, answer questions, give you good ideas, and make this all work out for all of us. So thank you so much for being here. I appreciate it. Hey, Mark. Yeah, we have plenty of gappers to work with as well. Those are the two things we cover. I like small gaps. The smaller the gap, the better. So something, say yesterday ran from 19 to 20, and then on Monday it gaps to 20.2. That would be a good entry. But if it gaps up to like 21, that's probably too far extended. So small gaps are usually the better gaps rather than big gaps. Because large gaps often do what? They gap and crap or gap fill, right? But small gaps often continue. The trick is looking for charts that have enough directional volume and volatility make for a good setup for us when we're looking at how to make that trade work. So I teach you how to do that in the live room too. I run my live room very much like a day trading seminar, so it's not just alerts or squawks. I say, this is the reason why I put the alert here. This is why I'm trading it here. This is why I'm selling it here. And I give you step-by-step walkthroughs on both live trades I'm doing as well as the rest of the calls from our members. So anyway, do consider it. I hope that y'all do well, and I will see you hopefully on Monday morning. And just remember, reminder for all of my regular room members, we do have new logins and passwords for Monday, so look for an email tomorrow with that information. All right, take care, and I'll see you guys next time. Bye for now. And have a good weekend. Stay safe out there. Stay out of the heat. All right, take care. See you next time. Bye.